Okay, good morning, folks. Good morning from quite a nice sunny London here this morning. Hopefully you are doing well. Perhaps you can give me a loud and clear thumbs up. Make sure that I'm coming through okay. Welcome to today's webinar. My name, for those that don't know, is Andrew Lockwood. I am CEO of the City Traders, and it's been my pleasure to be invited here again by Eightcap as one of their guest analysts for the month of February. Now, if this is your first time with us, let me advise you that we will be doing this for the whole of the month. So I'll be doing Mondays and Wednesdays. So you'll be getting me at this time. And for the rest of the year, March all through to the rest of the year, you'll be getting another guest analyst doing pretty much the same thing. So it's a good sort of insight to how professional traders such as myself attack the markets and so forth. So make sure you are registered for that. Delighted to be here today. This is my second Wednesday now. We did an event on last week, which was really quite an exciting week because we had so much going on in terms of central bank rate decisions, and then we had non-farm payroll. So quite a busy old week last week. Some big moves we saw in the financial markets. And then we had non-farm payroll on Friday. Typically, when we have such a sort of a busy sort of a macro week like we had last week, the following on week, i.e. this week, does tend to be less busy on the macro front, on the big sort of fundamental front. So not a lot of drivers driving the markets at the moment. But what we'll do basically in this session today, I'll go through a bit of the events that have been unfolding in the markets on the sort of fundamental view. We'll look at what's been going to the currency markets, the stock markets, and then I'm going to share with you. I know some of you are, you're new to trading. I don't know the exact level of your experience. Maybe you can share that with me now. As I always say, I'd like to see some engagement here as well. If you can tell me where you're from and your level of experience, I'd really appreciate that so that I can know where I'm pitching. But I'm also going to show you like a very simple bit of price action that you could potentially maybe go away and do some research on, and maybe do some back testing and seeing if you can spot any of these little patterns. It's just basically a little bit of a price action pattern that I find very useful in picking trend reversal. So you can use this price action pattern with trend as well, and we'll talk about that next week. But this week I just want to talk about the trend reversal patterns. When you spot these, and you can do these on all the time frames as well, they can be quite powerful. A little strategy in here for you to go away and start playing with, and I'd be really interested to hear your feedback on it as well. So there you go. Okay, so Dave Lovell, good morning to you. Good morning. Where are you from, Dave? Where are you from? Good to see you in the room. We've got I recognize that name. I recognize you. Are you in our community already, Dave? Yeah, for those that don't know, I do run a trading community at the City Traders as well, where we basically stream around the clock, doing pretty much this, myself and another analyst trader. Right, okay, so let's have a look what's going on. You can see here on the screen, and if you've been following me at all over the last 6 years since I've been on the education space, you see behind me there, I had 255. We're just talking to the producer here before I came on. 255,000 YouTube followers when I left the old setup. So a lot of you would have followed me in the past. If you followed me in the past, you will know that this chart that I have on my screen at the moment really is, for me, it's my sort of the backbone of everything that I do in the currency markets, and of course I trade other markets as well, indices, commodities, and so forth. But if trading the currency markets, and I generally stick to the main 8 currencies, and which I don't trade all 28 different currency pairs. But this is really my backbone. I rely on this so heavily in all my trading. Now, unfortunately, it doesn't predict the future. It doesn't tell me what's going on in the future. If there were such a thing, then maybe I would be a billionaire and gazillionaire and sitting on I wouldn't want to be sitting on a beach all day long. But there you go. You get my gist. I mean, basically, it doesn't predict the future, but it does tell me exactly where the money is flowing at the moment. And when I'm trading the markets, as any of you, if you are trading at the moment, or you're thinking about trading, or trading for a while, trading is all about having an edge. Okay, it's all about having an edge It's more likely to happen than not. But more likely to happen than not doesn't mean it's going to happen. A lot of traders fail because of that. They think they need to be right all the time, or they need to be right most of the time, and they don't. Trading is, quite frankly, all about being right just a little bit more than you are wrong. And if you're using the right risk management, you don't even need to be right more times than you are wrong. But that's a definitely different topic that we'll go into maybe later on in the month. But this basically gives me an edge. Okay, now I used to stand in the trading pits in the city of London, brightly coloured jackets, shouting and screaming at people. And I would basically, as a local trader, wearing that red jacket you see behind me now, as a local trader, I was trading quite a small account compared to the big institutions, Goldman Sachs and all that. They were on the other side of, the pits and so forth. If they were shouting buy, 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 you can bet your life I was shouting buy, buy, buy as well. If they were shouting sell, 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 I was selling as well. I was generally going with the trend. And this basically tells me where the money is flowing. It shows me where the money is flowing at the moment. It shows me what currencies are strong and what currencies are weak. And my edge now that I've taken onto the screens, certainly on my trend following strategy, is to buy strong currencies, buy the currencies that are strong, and sell the currencies that are weak. And you can hop this between the different time frames. If you want to get this, you can do so. I know Eightcap are about to release, about to have their platform here on TradingView as well, so you can actually hook your trading platform in through Eightcap. I think I've just been told this morning by the Eightcap team that they're hoping that to be end of February, March indeed, if you're trading the pots. So this is basically the sort of the technical overview of what we can expect, or what's happening at the moment. I've got this set on the 4-hour chart. Of course, I can toggle between the different time periods. I normally like to use the 4-hour for my intraday stuff. It shows me what's happening, but I sometimes look down, I do look down at the 1 hour as well. So it shows me at the moment in the markets, the dollar is the weakest currency. Now, we've had a whole bunch of macro news coming out, and I'll talk about that in a second, but the dollar is the weakest currency at the moment, and the euro is also tracking it lower. The strong currencies happen to be the commodity currencies. The commodity currencies are the commodities such as the Australian dollar, such as the oil-based currency, which is the Canadian dollar, which is the loonie, and the New Zealand dollar as well. So commodity currencies, that's normally a risk-on theme, are strong at the moment, and the risk-off currencies, dollar trading lower at the moment. Now, just before I get into looking at some sort of ideas on the charts, because there isn't a great deal going on, I just want to briefly talk about what's happening on the fundamental picture. We had last week central bank rate rises out of, first of all, the Fed. They moved their interest rates by 25 basis points. The UK moved their interest rates by 50 basis points, as did the ECB, the Eurozone. So all interest rates are heading up. We know why they're heading up. Of course, they're fighting this big, massive inflation picture, and that's the big sort of problem for many of the central banks at the moment, inflation. So all those central banks moved up, and that was pretty much expected. What was basically not expected was the really strong employment numbers that we had out of the US on Friday. Non-farm payroll came in at 517,000, if I'm not mistaken from memory, far beating all expectations. I think we were running a competition in our room, which is giving away an Eightcap assessment account in our prop firm, which we run. And I think I was the highest in my guess. So I came in at 287, but it came in at 517, so no one won the prop assessment at that time. But it just shows you a really tight labour market, and with that, the US dollar, you can see pretty much soared high up. You can see it here. It is basically around here. The US dollar, the green line, basically hit these highs right up there. This is the strength meter, as I say. So dollar came into real big strength as markets were predicting that the rates stay higher for longer. Now, yesterday we had Fed Chair Powell on the wire. So that's what the markets are waiting for this week, and that's all the markets are waiting for this week as well, to be honest, Fed speakers. But basically we had Fed Powell basically talking about rates again. And the dollar's come under a bit of pressure since he was speaking. So the dollar is now coming under pressure. I'll show you the DXY in a moment, but the dollar is being sold off. I don't know I think it's been sold up down to profit taking more than anything, because you don't think he was really dovish, although he wasn't massively hawkish. Hawkish basically means rates are staying higher for longer. Rates are going up more. He said the rates are going up more. Well, we know that. We know they're going up, and maybe another couple of times. That's pretty much in the market. He wasn't overly hawkish, which is why the markets are now seeing some profit taking in the US dollar. But today, I mean, the only thing really that's going on this week is speakers out of the Fed. Okay, this is Wednesday. Now you can get this if you go to the Eightcap portal. I think most of you have the Eightcap account there. So you go to the portal here, log into your account, and you got this new economic calendar now. Really good economic calendar. Basically tells you what we are expecting in the different economies around the globe. So here we got Wednesday today. It shows you what's out. You're scrolling to the left. So basically, anything that's in yellow is deemed to be high impact news. So we got Fed Wallace speaking this afternoon in the UK time. So he'll be out there talking about rates. So what the markets are doing, they're basically looking for guidance, forward guidance. Any hint that they will be pausing or pivoting, obviously will put the dollar under pressure. So that's basically what the markets are looking for at the moment. And later on in the day, again, if you scroll out, back, I think we've got, we've got Williams lunchtime here in the UK. Fed Williams is speaking, so he's normally pretty straight down. He's not necessarily deemed as a massive hawk or dove. He's speaking as well. Again, we'll be looking for guidance. We've got wholesale inventories, so check these out as well. You can do that in your own time. This is a whole new calendar that now Eightcap have made available to us. It's really good, and also tells you all about the news as well. What I like about the Eightcap economic calendar is, it doesn't just tell you what the expected rate or expected data read. If you scroll down, you can actually see the levels where it's come from. So there's quite a lot of learning to do in here. You can see where the history of the data that's been released. So it really is a cool piece of kit. So this is, for example, consumer price index out of Russia. Oh, look at that. Let's have a look at crude stockpile. So this is interesting as well. You can see the history of it as well. So great little economic calendar. So get your teeth into that, bookmark it, log into the Eightcap account for you to take advantage of that. Right, okay, let's have a quick look then. So as I say, the dollar is showing some strength at the moment, okay, and we can tell that by going out to the DXY. Now, as I was calling in our trading room yesterday, I don't actively trade the DXY as a standalone entity. The DXY, for those that don't know, it's basically the dollar index. Okay, so it's the dollar pitched against, I think it's 6 other main currencies. Okay, of which the euro, incidentally, is the most heavily weighted. So the euro accounts for about 2/3 of the index. But the reason why I think you should be looking at this when you're trading, remember, the dollar is the most actively traded currency pair. Accounts for 88% of all transactions, has the US dollar on one side. So it's important, if you're trading any of the currencies, that you know what's going on with the dollar. Okay. Now, yesterday the markets were getting quite excited about buying the dollar, certainly against maybe the Japanese yen. The new governor going to be voted in there soon, and they're expecting that the current deputy governor maybe get the nomination, and he's sort of like continuity candidate, sticking where it is with Kurudo keeping rates at there. So people were getting very excited about the dollar yen yesterday, buying the dollar, selling the yen. And I was saying to the trading room, look, I'm not disputing the fact that the dollar may be going stronger, but you've got to be aware that we're coming into a big roadblock resistance. When you see these resistance levels, of course they get broken. That's why, otherwise there would be no trends in markets. But what's important, I think, to know is you have to know this. If you're trading sterling against cable, which is pound against dollar. If you're trading Aussie against the dollar, if you're trading New Zealand against the dollar, you might see a great trade setup in the Australian against the US dollar. but you need to know that the dollar is going to come into just roadblock resistance on the bigger picture, on the bigger index. And that's why I'm saying just be a little bit cautious about buying the dollar at the moment. In fact, this level that you're seeing now on the DXY is showing, I would say, a clear rejection of this zone, and potentially now will have a continuation of the downtrend and a retest of the sort of 101 zone. Now, another 2% drop from here. Okay, we could have dropped. Look. Powell yesterday was not dovish. Yeah? He was hawkish, and look, we could have pushed this considerably higher. It didn't. It's technically failed at this level, showing me that the US dollar is currently under pressure. So we can look at the euro against the US dollar as a potential pullback. Potential. So let's just. I always like to use top-down analysis, by the way. Okay, in my trading, we always like to use the top-down analysis approach. This is in the bottom right, I have my daily, and then I have the 4 hour, and then I have my trading chart there, whether it's a 15-minute or 1 hour, I'll drill it down to there. But I always like to know what the bigger picture is doing. Okay, so for example, we are seeing a rejection at this zone. Okay, this big momentum candle yesterday, fully engulfing. Look at this zone here. You can't dispute that this zone here, back from August last year, big V-shaped recovery. That's basically where this ascent took us to with the 150 152 level when the Bank of Japan intervened. This ascent started from here. Okay, yesterday's candle, we smashed through it, engulfing the previous candle, and trades lower. This now shows me on a technical level, this is not highly likely, never like using that word when we're trading, more probable that this is going to get back down to this support zone down in here, okay, down to the sort of 129.50 level. So I'm looking at that as a potential play. So that's my sort of overall bias. And then I'll look here at a potential reversal. And in fact, this is one of the patterns that I like to use. I'm just looking here at the and I'm going to show you this in a moment when we go on to one of these price patterns that I'm talking about. But with that bias in mind, where do we enter? Well, I like to enter on what I call a 1, 2, 3, 4 reversal. You've got 1, 2, 3, then you have the pullback. It fails to take out the previous pullback, and you enter with a short around there. That basically is a pattern that I think you can be using on these pullbacks. So basically, with that moving through yesterday, it's a sell trade, and then you've got your profit target basically back down there at 129.50. So you've got a very good risk reward trade all the way back down to say the 129.50 zone. From here, you can have stops above those swing highs. It makes for a decent. Well, you'd have your stop basically above that. But I mean, we've missed this boat to a certain extent on this setup. It happens on all time frames, by the way, and I'll explain it to you in a moment. But you'd have your short trade in here, where you take out that structural support zone. Your stops are above there, and your trend continuation reversal, but it's short-term trend takes you down to 29.50. It's a really good little setup. So keep an eye on that type of pattern. We'll see them across the way. But anyway, the bias is for dollar yen to continue that move lower, and you might even have a little go. There might even be one in the euro yen as well. We have not really seen one in the euro yen. Let's have a look. No, I'm gonna leave the euro yen. By the way, one of the biggest, I will say this is a bit of a pep talking or mentoring, whatever you want to call it. The main reason, the biggest problem that many traders face when they are in the markets for the first time, and you might even be experiencing it now, is the compulsion to always be in a trade. Okay, as far as I'm concerned, there's 3 trades that you can do. You can buy it, sell it, you can do nothing. We just want to make sure that all our rules align, and we only buy it or sell it. If you're doing a trend following strategy, then and you're sticking with the moving averages, above the right side of the moving average or below the sales, you're not buying. You only, you're not. If the moving averages are popping up, you're not selling. You're only buying, and you can elect not to trade until you come into a big level of resistance. That is a slight pendulum swing to give your trading strategy an edge. Most traders, when they come into the markets for the first time, or been in the markets for a while, they have this compulsion to be in a trade, And that is a common mistake for many. I know it, I appreciate it. It's why the sporting arenas around the globe have spread betting and betting companies, because it's exciting. So at half time during the match, you get flash up of the odds of the next goal scorer, because people like the excitement. Unfortunately, that has migrated into the financial markets to a certain extent with the rookie traders. If there's nothing going on, you don't trade it. Roundabout way, euro yen. I'm not trading the euro yen at the moment. Okay, so that's basically what I was saying there. I'm quite happy not to just call a trade for the sake of it. But always go back to the momentum meter to look for potential setups. I mean, I'm looking here at the euro against the Australian dollar, euro Oz. You can see here at the moment that the euro Oz potentially is worth looking at. And I haven't looked at it yet. I'm just winging this as I go to see if there are indeed some setups. There may not be any setups, so I'll just have to see what is going on at the moment. So this is the daily chart. You'll see, well, you can see here on the 4-hour chart, the euro yen is now trading lower. We've come into this level of support. Okay, and would I trade that at this moment? Well, not for trend following. I wouldn't. I'd potentially be looking for the reversal setup, which I've just shown you on the dollar yen. Looking for potential reversal at that on the lower time frame charts using the same type of price action. We've had the pullback. Let's have a look. We've not really got nothing really setting up there for a pullback either. So again, I would leave that. But I'll tell you what I will do. I'll just show you a little bit of price action sort of setups that I'd like you maybe to go away and sort of practice or go back and do some research this week. And then you can let me know what you think. I call this the 1, 2, 3, 4 reversal. It's very simple. This is a very simple little strategy. Not going to make you rich, but most traders that are out there are trading unhinged. And that basically means they don't have any rules of engagement. If you are going to give yourself half a chance at this, you need to have some rules of engagement. Whether it's trend following or counter trend, just trading on the wing and the prayer ultimately will just be a slow bleed to the account. So I just want to share this with you. I put this out on YouTube a couple of weeks ago, 3 weeks, 4 weeks ago. I'm getting a lot of good feedback from it. It's a strategy that we trade. My colleague trades a variation of this inside our trading room. It's basically a reversal strategy, and it relies on big levels of support and resistance, or we call them demand zones or supply zones. Supply basically means there's liquidity looking to take it lower. Supply, of course, is more supply. Prices always go down. If there's more demand, prices go up. Just basic economics. So we put in these supply and demand zones or support and resistance zones. Resistance basically means where the market could resist. These are looking back on a price chart to see where prices have been respected in the past. See price action sitting up, touch the resistance. Okay, we don't know if it's going to break through. We don't know if it's going to stall at this level. But this type of price action where you see a pullback, all markets have pullbacks, yeah. But then the continuation of the trend fails to take out the previous high at that resistance. That is an indication of a potential reversal. Not a guarantee, it's an indication. You trade this, as I say, on any time frame, using the higher time frame for support and resistance. Now, if you do this at really important support and resistance zones, the daily and the higher time frames, the 4-hour, for example, and you're trading this on a 15-minute chart or a 5-minute chart or so. My colleague actually does this on a 1-minute chart. He does very well. But it's high probability when you use those support and resistance on the higher time frame chart. So basically, we've got a 1, which is the new high. Okay, so that comes into the resistance zone. Then you have the pullback, and then the third pullback, 0.3, fails to make the previous high. Okay, and then the continuation goes. That's 4. If it breaks that swing low, that's your sell trade. Okay, very simple strategy. Don't go and bet the farm on it. Don't trade this afternoon or today. Go and do some back testing. See if you can spot these and see how they work for you, and then maybe trade them on a demo account for a while before you start trading them. Get them written down. Get the rules written down. You can take screenshots of this as well. I don't know if it's replayed or whether you can. I think you can watch it on catch up as well. Take a screenshot. Get it down on a journal, and then look for these. So your short trade, you're gonna have your stop above. You always want to place the stops. Certainly, if you're using our prop firm, which is sponsored by, which is in partnership with Eightcap, where we fund traders. I will fund you if you can prove you can trade. We've got some very decent rules there. We partner with Eightcap, so basically we'll be trading an Eightcap account. If you're using that, you need to use stops. Otherwise, unfortunately, you get breached out, and you don't get knocked out. You just get the trade closed, and we ask you to do it again using stops, because ultimately it's our money on the line. So you've got your stop levels placed in there. That's your risk. So you risk manage accordingly. So you're only using the predetermined risk. Okay. Now risk management is very important. Which way very important. Not the most important thing is psychology, but it is important. I'm suggesting that you take profits at 1-to-1 for 50% off the table. So you out of the trade 50%. Then you can move to break even. You can play with this. You can take all off at 1-to-1 if you wish. I think that's better than tossing a coin. If you can get slightly weighted coin, you're going to make money in the markets. Here's a 1-to-1 risk reward. You might take say half off one, the other half down as well. It's a PowerPoint, of course, it's going to work. But the challenge is for you now to go away and have a look at that in the real environment on a demo account. And the other same is the reverse. It's the bullish reversal. Here we've got a downtrend. You can see we're in a nice little downtrend. We've come into a support zone. We don't know if it's going to trade through the support. We don't know if it's going to respect support. But this bit of price action tells us that it is respecting a bit of support. Well, how do we enter the trade? Again, higher time frame support and resistance is crucial. You see the pullback. Okay, pullback and then the continuation, but the continuation fails to hit the support zone again with a higher low. Same type of thing. There's your 1, there's your 2, there's your pullback, there's your 3, a higher low, and there's your entry as it breaches through 4. You put in your risk, which is position size accordingly. Okay, so you're only going to have X amount of percent. I would say no. Well, personally, it's entirely up to you, but I don't think you need to be risking, more than 0.25% on a particular trade. If you're trading on the lower time frame charts, that has a whole bunch of advantages using just 0.25%. One thing it won't do is get you rich overnight, but if you're grinding away to achieve a profit target of, in the prop challenge or in the prop assessment, and then start trading decent sized money, it can build up. Yep, 0.25% on a $1,000 account is nothing. You make it's $2.50. But if you make 0.25% on a $100,000 account, well, they add up, and it must be worth paying us $25. And you make 0.5% in the 5% in the year just by lots of these 0.25%, then 5% in a month, just by compounding these 0.25% up. Then you're talking about $5,000 a month income. Just by using a 0.25% risk. It also takes the pressure off you. And it also means that no one trade should break you and make you. Biggest challenge for traders is losing a trade and revenge trading and firing back. If you're using 0.25%, you won't get stuck in that type of rut. So you establish your risk, and then of course you can take your profit targets at 1x risk, and then you can move to break even if you wish, and then trail up, or you can take all off. Again, I just encourage you to go away and back test this. This is basically something that I'm trying to get across to our trading room as well. It really is, it's essential that when you're trading that you have some rules in place. Let's see if we've got any setup. We've got a couple of minutes before we go. Are there any setups here at the moment? So here we had not really, we're coming into a support zone here at the moment. Okay, so this is the 1 hour support. You can literally take this down to the 5-minute chart. I'm not a massive fan of 5-minute trading these days, because I am nothing going on there. Can't really see any there. We've got not really. We've got to pull back. We've got well, you might call it there. I mean, I wouldn't be trading this one. We've just got too much sort of noise in here. But you've got a little bit of a one here, isn't it? You had the move lower, okay, then a pullback, and then a higher low, so you'd have an entry long there for continuation back up to sort of 89. Okay, 10 or 11 pips. You can have yourself a small. It's a 5-minute chart. You can have very tight stops on that. But that's a little strategy for you to think about. As I say, take some screenshots of that, and if you are inclined, come back and watch me next week, and then maybe you can engage with me. and let me know what you think. Any comments? Any ideas? Will you be having a go at this one? Interesting to know for people who are interested in strategy. If you're coming on for me to just tell you where the markets are going, unfortunately, it's a bit of a quiet week for that at the moment. Stocks are looking okay this week, to be honest, which is a bit of a surprise, seeing that the dollar was so strong. But stocks are certainly recovering at the moment, as you can see. Stocks, here we go. Stocks having a nice little bounce. Look at the DAX. Okay, DAX pulls back into, this is trend following now, so pulls back into previous highs for a continuation high. If it breaks the structural level at 15,375, well, sorry, it just has done. Beg your pardon, I just missed that candle. 15,375 is clearly a buy up to the new highs. There you are. All right, folks, that's about my lot for Wednesday. Thanks for tuning in. I do hope that you've got something there to take away and work with. As I say, most traders are failing because of the randomness of trading. Really important that you have something to hang your coat on, a hook to hang your coat on. Basically, something to keep you focused, to keep away from that randomness of the markets, which quite frankly is the killer of most. So anyway, thanks for tuning in. I will be back next Monday at the same time. Monday stream is basically a bit of a recap of the week ahead. We've got I think we've got some data out next week. We've got CPI coming out of the US, so we'll definitely be paying attention to that. CPI is the consumer price index. It's basically inflation, so that will be key. I think the US data that's coming out over the next couple of weeks is going to be quite important for the direction of the dollar. So we will be paying attention to that. But today, and pretty much I would say for the rest of the week, the dollar most probably comes under a little bit of pressure, and buying the commodity currencies against it maybe has some mileage. Okay, folks, that's it. I'll see you next Monday. If you only can make Wednesday, I'll see you next Wednesday at the same time. But I encourage you to tune in for both sessions, and there is a recording as well. I'm not sure how you get the recording. Maybe you get sent that by email, but you can watch this back, as I say, in your own time if you want to learn more about it. Thanks for tuning in, guys, and we'll see you soon. Have a good week.